I'm going to be showing you guys a complete breakdown of price action. Now, if you're interested, stick around and let's get to the charts. This is part 1 of 3 parts of price action. The reason I'm doing this video is because I know when I first started trading, it was very difficult to understand how price action works and really getting someone to break it down in an advanced way. There's a lot of people saying, oh, well, this is a bullish bar, this is a bearish bar, this is a double bottom. That doesn't tell you anything. Look for a reversal bar or a bullish engulfing bar at a support level. Like, okay. And then you buy it and you're like, well, why didn't it work out this time? It's because you're buying it at the wrong time, right? It's because you're buying it just based off of one bar and not understanding that what are the prior bars telling you. I want you to first remember that. You want to understand what the prior price action is telling you before you say, let me buy this reversal bar. Well, no, because if you're in a bull trend and the market's pushing up and now you see a bearish bar, you're like, oh, that's a perfect reversal right here. Let me just short the market. It doesn't make sense. You shouldn't be looking to short the market at all. There's a way higher probability that that bearish bar is going to turn into a pullback and a continuation of the trend than a reversal. So first of all, it's about looking at the prior bars, the prior price action, and determining what the market is telling you. Is it in a trading range? Is it in a bull trend, a bear trend? What's going on at the moment? If it's in a trading range, you want to buy low, sell high, or short at the resistance and buy back those shorts at the bottom at that support level. If it's in a bull trend, you want to only look for ways to buy. And then for the bear trend, it's the same thing. If you're in a bear trend, you want to only look to short the market. You don't want to be looking for reversals, okay? So today I'm going to break down some price action for you guys. I'm just looking at QQQ. Now, what I want to talk to you guys about is when you see a gap up like this, you want to look at it as a bullish trend bar. See one of these bullish bars, you want to look at it as a big bullish bar, which shows strength. The bulls really took over the market, okay? That was in after hours. So when you see that, don't just look at it as like, oh, now what does that mean? There's just a big void. Yeah, that void can be filled, okay? And this void, look at it as a bull trend bar. So that shows, okay, there's a bull trend bar here. Let's pretend. That's huge, right? That's a lot of strength. Now the market pulled back, which was expected. It was expected to pull back, right? And if we map out our areas, support, resistance, all these areas, I'm gonna map out some resistance levels from prior price action, prior days, right? This is a very strong, resistance level. So what I want to show you is this. The market pulled back, pushed back up. We had many bullish bars. This is the stuff that I absolutely love and enjoy. So right here, it's retesting the same area, completely sold off, right? As you can see, if you look very closely, right here on this 5-minute bar, it tested that area. It pushed back up and it tested, it pushed back up, it tested. It was testing that area. The market pushed above the area and came back down and retested the area. So when a market breaks out of a certain support resistance area, see, I don't say price, I say area. It's an area. Normally it tends to retest that level. So it broke out and it retested that level. It retested and it pushed back up. This is not showing us tremendous strength because it's a little bit higher. This is a little bit higher than the previous high. This is a little bit higher than this high. So this is showing us a wedge. 1 push, 2 push, showing us a wedge pattern, which normally a wedge pattern creates a measured move. So when it breaks out, it normally breaks out the amount that this wedge is. So here, let me map out the wedge for you guys. This is me pretending I haven't seen the future, right? So looks like it's creating a wedge. Like I said, it's a level. It's not an exact price. So what normally happens if the market broke out above, right? What would happen is around this area from the top here to the bottom of this area, that is how far the move would be. Now it broke down, it would be that amount, and normally it's going to test, what's going to test? The support. So as you can see, it is a mathematical game. It makes complete sense. If it broke out below and it went that exact length, it would break out and should, if it has a strong breakout, test that previous low. So as we see, the market was just consolidating, push down, push back up, retested that resistance again, push down. As we can see, this retested that same exact level, well, previously it was a resistance level, turned into resistance and then turned into support and turned into support again. And it bounced off, right? And that's the thing. The market tried to break out and wanted to get down to here, but the bulls had so much strength. Remember, this is a huge bullish bar. It's not there because it's a gap, but that's what it's showing. The bulls had so much strength that this was a failed breakout. It failed and it reversed. Now it retested the same area a few times, that resistance. The next day opened and had 1, 2, 3, 4, 5 bullish bars. Not only are they 5 bullish bars, they were closing. Well, the first one is sort of indecision because it's the first 5 minutes of the market. The second one too, but it closed on its high. The second one closed, the third one closed on its high. The fourth one on its high. Fifth one on its high. When it closes on the high of the bar, that's showing a lot of strength. That's great, showing the bulls are in control. Not only that, it's above this moving average. That's great, another plus. Now, when you're looking at this, you're like, okay, well, where do I enter? Because look, if I enter here, I was told I have to put my stop loss all the way at the bottom of that spike, which is true if you just say, okay, I want to enter here because maybe it's going to pull back. You never know. know, right? So what I like to do is I level down, and this is what you should do. When you see such strength on a 5-minute time frame, this could even be on a 1-hour time frame. If this was a 1-hour time frame, you would level down into a 15-minute time frame, right? So for example, this is a 5-minute time frame. So what do I want to do? We have 4 bullish trend bars closing at their high, showing bullish strength. The bulls are in control. Therefore, I'm not looking to short the market. I'm only looking for opportunities to buy, to get long. So what I do, I move down to a 1-minute time frame. I'm here at a 1-minute time frame. So now we have it here. It may look different. It may look like a lot more bars, but that's because each bar equals 1 minute of trading. So it's pushing up, right? So now if we're looking at this area right here, this is a pullback. This is a bull flag right here. At this bar, close at its high, put your stop loss below, you'd buy above this bar. It's showing you strength and it's retesting this exponential moving average. Look at this, complete strength. Your understanding at this point should be, okay, I'm not looking to short this market at all. I'm only looking for opportunities to buy. Push back, another opportunity to buy, okay? Now, people would say, oh, well, why am I buying here? Well, because first of all, the market is showing you that the bulls are in control. There's so much bullish strength that you should not be looking for reversals. And guess what? Everyone else is only looking to buy as well. When they see this sell off, they look at it and they say, perfect, I can get the stock right now for a cheaper price than when it was up here. I can get it cheaper. Oh, it's pushing down a little bit more. Perfect. I'll get it cheaper. And look, we had a bullish bar. This is a 2-bar reversal right here. And as you can see, if you really look closely, right here, this area pushed up, pushed back down, pushed up. This right here is a support level. Came back down, tested that support level, broke back up. 2-bar reversal right here. Bearish bar, rejection, close on its high, bullish bar. You can get in right above this bar, put your stop loss below. Just this move right here is a 1-to-2 risk to reward ratio. It's a great trade right there. Look, we got another pullback. What is this retesting? It's retesting the resistance right here. It's all retesting. Retesting the resistance, pushing, 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 pushing. These are inside bars, inside bars. Right when it breaks above an inside bar like this, well, you should only be looking to buy. Right here, it breaks above these inside bars. Boom, you should get in. Right here at that breakout. Look, we have 1 push down, 2 push down, comes back down, 3 push down. So we have 3 pushes down, okay? So you know how like a double bottom, a triple bottom. This is a triple bottom. 1, 2, 3. It's just a micro triple bottom. It's not on a huge chart where it's so obvious, oh, 3 pushes. No, you have to look very closely. A triple bottom. So that's another confluence, and that's another reason why you should be getting in the trade. Other than the bulls having so much strength in the market, you get in, stop loss below, pushes above, comes back down, pushes above. Like these are all these areas where the market is getting rejected and then continuing were all prior resistance levels that turn into support levels. Keeps going, right? Look, even this pushes up, pulls back, and keeps going. Look, it pulls back to the top of this resistance level right here. This resistance turned into a support level and pushed up, okay? This also right here is a 3-bar play. 1, 2, 3. These are 2 inside bars. So on this second inside bar, which you should only be looking to buy, also retested that resistance level that turned into a support. We had the push, the strong bulls were still here, came back down as a pullback. So then we had a lot of bullish strength here. Came back down, retested that resistance level, which turned into support. And as you can see, we have a 3-bar play, which you should be getting in over this bullish bar with your stop loss below. Your stop loss, when this closed and this goes above, your stop loss should be here. You should only be risking to here, because if the market pushed up and came back down below that bar, that would create a push down, a push up, and a push back down, which means it would create a double top right here. And what you can tell is that would be a double top. But if I look at it, it's also below the moving average, and we have 1, 2, 3 pushes up, which equals a wedge. Now, this is where it gets very complicated in price action because you're looking at multiple things at once. But because the bulls had so much control prior and previously and still do, we're looking to buy. Big bullish bar closing at its high. Now it's above the moving average. Now this will all be above the moving average on the 5-minute time frame. You're only looking at this time frame to get in on a trade. You're trying to get in on the trade, right? And you can't do it on a 5-minute time frame because if you're just looking at big bars, you're like, oh, should I just get in now? Incorrect. You have to look and scale down to a smaller time frame so you can look at actual entries. So now we have a big bullish strength, okay? So we got that 3-bar play. People bought it, pushed back up, another rejection, pushed back up, came back down. People are just buying at this point. Whenever they're seeing a pullback, they're just buying. They're saying, okay, pulling back, I'm getting it for cheaper, I'm gonna buy. Push back up. Pull back, I'm getting it for cheaper, push back up. Pull back, I'm getting it for cheaper. Look, every time it's retesting the resistance right here. Push back up, came down, push back up, retesting that resistance that turned into support, push back up, and it just keeps doing the same thing. This is so profitable. Well, these days don't happen every single day, right? They don't happen all the time, but this is a very strong bull trend. And you just getting in at what would be the best thing to do is just draw a trend line Be like, okay, at this level is where the market tends to be bouncing. So when it's getting close to this level, I'm going to buy. So every time it's getting close to that level, as well as other confluences that show and come into play, you buy. Perfect. You're constantly profiting the entire day. Now over here, we break below the level, we push back up, and we break it down, right? And now what we can see at this point is these were constantly making higher highs. This was barely higher than this one, and we had 3 bearish bars. So therefore we're seeing, okay, the bears are coming back into the market. We're back below this moving average. And as you can see right here, push down, push up, and keeps going down. This is a double top. 1, 2, comes back down. Do I say short the market here? Not at all. You're not looking to short the market. What this is going to be on a higher time frame is just a normal pullback. So if you were going to look at the 5-minute time frame, this would just be 1 bar right here. Just a pullback, because people are still looking to buy. They say, okay, we're making profit now. I want to take some profit off the table. So everyone taking their profit, they're selling. So therefore the market's going to push down. It's going to be a pullback. And once it gets low enough, the bulls are going to say, okay, should we buy more now? That's what they end up doing. They buy some more here, pushes up, comes back down here, comes back down here, pushes up, creates a double bottom. 1, 2, double bottom right here, right? And look, it retests the prior high and just keeps going. Incredible. Retest the prior high right here. You take profit and even broke above and kept going. So this was incredible bullish strength. I was looking at the 1-minute time frame because the 5-minute time frame was so strong. I don't suggest people just trading off a 1-minute time frame, as a lot of it is just false breakouts. I personally look at the 5-minute time frame when I'm day trading and scalping. I only move down to those lower time frames when there's such strength like this in a 5-minute time frame that I can't even find an entry. Then I move down. As we can see here, there's just so much price action and there's so many different things. When this broke below the moving average, pushed back above, now we're below the moving average, and there's just so much price action here and different things that the market is trying to tell you that majority of traders don't understand because they haven't studied price action in depth. You don't need 500 indicators. You just need to look at price action and understand what it's telling you. For example, even here, this high, we pushed up. I wouldn't consider this the next high. I would consider this the next high. That's a big difference in distance here, right? Pretty big distance right here, right? But as you can see, the next high was nowhere near this previous distance. From this high to the next high, there's a big difference here. What is that showing us? That's showing us that the bulls are getting tired, right? The bulls had so much strength. They were continuously buying. They pulled back, they kept buying, but they didn't buy as high as previously, right? Because that would have been all the way up here. They didn't do that. The market push back down. There's another pullback much sooner. That's trying to tell us that the bears are entering the market. Some people are shorting, and a lot of these bulls are taking profit, especially after making money. If they're buying here, anywhere, they're making money at this point. They're saying, you know what, I want to take some profit. When you see that a prior high has so much distance between the high that the market just currently made, and the market just keeps making that amount of distance smaller and smaller and smaller, it's showing you that the other side, the other traders, whether it be bears or bulls, in this case it's bears, they're starting to get in control of the market and they're starting to short, and a lot of bulls are starting to take profit, which adds to that selling off. Most likely it's going to keep pulling back. We're going to see another push back up, and it might just barely peak above this high right here. Most likely what's going to happen is the market's going to keep pulling back because we can tell just by this that there's more bears entering the market. It's going to pull back and it's going to retest this high. I don't know if it's going to keep pushing up above that high. It could. It's the stock market, but just based off of this and depending on how far this is going to pull back, we can understand, okay, if this pulls back all the way to here, it's showing us that there are a lot more bears than we were initially thinking that have entered the market. So therefore, you're not looking for the market to end up here, right? When you see this, you're not saying, oh, let me buy now, okay? Unless it created like a double bottom here. You're like, okay. But when it pushes back here, you're not expecting it to maybe even reach this prior high. It might just pull back and come back down, which then would create, what would that create? I'm gonna map this out, right? And if it came back down here, so if it came back down here and then created a double bottom, you could possibly get in, but I'm expecting 2 legs from the market now. One push down, maybe another push up, another push down, and then possibly a higher push. But I'm not expecting it to really push past this resistance unless this pullback shows strength and that the bulls come back into the market, right? You can't guarantee anything. You can't look into the future, but there's many scenarios that can happen. For example, if the market kept selling off all the way to this area right here, now we can say, okay, this has been already a resistance level, has been a support level. It can possibly push back up, which most likely if it came all the way to here, we'd have some sort of push back up, a retracement. I'm not saying it's going to go like this. I'm not saying it's going to go like this, but we could have some sort of retracement. But what happens when this is what the market does? What is that? This is a head and shoulders pattern. One push up, that's a shoulder, a head, a shoulder. And if it breaks below this area, we could get a measure move, either the shoulder length, this length right here, the shoulder length, which would be this length right here, or we could get the length of the head. Majority of the time, it creates a measured move, which is the length of the head. which of course we back to a support level. Now, if the price action is making more sense now, that is great, because price action is very difficult to understand. It's not going to take you a week, 2 weeks, a month. It's going to take you years to understand this, right? And to really get it down in your brain. It could take some people a few months, right? I'm not going to say it's going to take you a few years. Now you're starting to understand price action, right? And how it works. It can take you a few months to really start grasping a few of these concepts. And it take you a few years. It just depends on who you are and how much time you're willing to put into it. Like anything else in life, you got to put in the time, be disciplined and consistent with trading the stock market, and you'll reap the rewards. I hope this video helped you guys out. I hope this gave you a different perspective on price action and a more advanced level of thinking about what the bars are trying to tell you. And if so, subscribe to my channel down below, and I'll be posting videos every week. And next week may just be another price action video. We'll see. I'll see you guys in the next one. Peace.